The bears have got a lot of problems. The market's now going to crash and usher in a bear market here, and we're being told, oh, we've dropped 20%. That's the magic number. S&P dropped 21%. That's the magic number. We now have a bear market, and that's a bunch of poppycock. We dropped 21% in 2011. We didn't have a bear market. It was a major correction. Dropped 20% in 2018. It was a bear market. Moved to new highs. For a couple months, it wasn't a bear market. These people with these percentage drops that define things, it's just a bunch of nonsense. We dropped 35% in 2020 in 3.5 weeks. Was that the shortest bear market in history? No. Dropped 27.5% in 2022. So 4 times, I just mentioned, we've dropped 20% or more. 4 times in this larger bull market, the market still went to new highs. This is number 5. Still make new highs. It gets a very exaggerated moves. And the QE involved in this thing, and it's just very animated, exaggerated moves up and down. The bears have a huge problem here. If we're pricing in recession right now, well, we've just seen the second inverting of the yield curve, and I told you through this crash here, we looked at this previously, it was still inverted. Now, it's uninverting for the second time. We did that in 2007, which is a carbon copy of what we have going on right now. This is a carbon copy of that, I should say. We went and we made new highs in an overall topping process. You had the inverting of the yield curve. It's telling us, hey, something's wrong with the economy. Something's wrong. Predicting we're going to get a recession. We had the inverting yield curve just right after the election. We already had it between the 10-year and the 3-month. We already had it between the 10 and the 2 predicting a recession before Trump ever got elected, before we ever had the tariffs. It's predicting a recession. So is the Psalm rule. So are other things predicting we're going to have a recession. We're still going to have it. There's going to be a fake out first, and we're going to see a breathtaking rally back up, likely up to the upper end of the channel. It's going to go in positive here and remain positive. It's steepening of the yield curve. This is what happens. Final phase of the blow off top. Bears have a real problem. It's because we've just had now the uninverting of the yield curve for the second time. When you've done that in 2007 and other times in history, you went and made new highs. Had a massive problem. Probably getting something very similar to 2007. About that in a second. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts, you like the indicators, let me know that by supporting the channel. I don't have any sponsors. I don't want to sell you things, so I just ask that you do what you can to help out. Follow the link below to take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. Check back on Sunday, and I'll show you some positive things that are happening. We're getting some bullish things happening. Awesome oscillator and some bullish signals could end up flipping momentum here, giving us a bullish reversal of conditions. The bears have a problem because, again, when we got the uninverting of the yield curve back in 2007, May of 2007, we got a second inverting of the yield curve, and we had a bunch of volatility surrounding it. But then we went, and that was a 12% drop in 2007. We just dropped 21% on the S&P 500. Key support, oh, we went back to key support right here. Went on and we made new highs. We did the same thing in 2018. We had volatility. You went up to new highs. In 2000, that was surrounding the tariffs. In 2001, at a 10.5% sell-off, but then you still went and made new highs. That's why I believe we're going to see new highs. With the second uninverting of the yield curve, the second uninverting of the yield curve, we went higher, but then the market attempted to recover as we did that. Do you see this? That really marked the bottoming process completing, and then going forward, the coming weeks ahead, over the next few months, we made new highs. I think you're going to see the same thing. And then we peaked, and then the steepening of the yield curve happened, and the market dropped. It's where we got the Fed panicking, and we got the Fed emergency cut there in January of 2008, and we had the recession began in 2007 that they told us wasn't going to happen. Just like right now, they're telling us it's not going to happen. And they're soft landing baloney. The other problem the bears have, and not only that, they have another problem with the 10-year yield. If we're pricing in a recession, we got a funny way of showing it with the yields soaring back up. What was it, 18.5% or something like that? Get that in a moment. But again, we've got the bottoming here of the credit markets, the surge, the S&P turns down. This is what happens. We move towards the recession. As we move towards, a crisis, the recession is surrounding a credit-driven issue, and that will likely be the same here with the banks and their exposure to commercial real estate, unrealized losses, and all the rest of it. This is what we've seen before in 2000. I've talked about this previously. 2007, we had this surge, and then things calmed down, and we went to new highs in both of these cases. In 2018 with the tariffs, you had the surge, things calmed down, and then you had the pandemic. And again, we see it over and over. The stress in the credit markets happens. It's the warning sign, the preview of coming attractions. Things calm down, you're going to end up going to new highs. The likelihood, and then we're going to get the real top. Then we're going to get the recession. Usually you get a fake out first, and this is the fake out. Oh, this seems so real. It does. That's why it's a fake out. It's fake. It's not real. It looks real. It's like counterfeit money. It looks real, but when you examine it carefully, it's not the genuine article. That's what this is. This is a preview of coming attractions. It's not bear market and recession starting. We're going to go higher, and then later the Fed is going to panic. We've dropped more than 20%, and the Fed hasn't panicked yet. This isn't it. This isn't the crash to start the bear market. This is the preview of coming attractions, and the credit markets suggest that. The credit markets, yield curve that I showed you, and the bond market suggest the same thing, that the top is not in yet. Right now, we have people telling us that we're entering a bear market. We're entering a recession. No, we're already in a recession. These are all the same people that when I told you recession is coming, these are the people that told us that it wasn't going to happen, that we were going to have a soft landing, and they scoffed at the idea. We have the CEO of BlackRock. We're very close to recession or maybe in one. This is the same guy that was scoffing at the very idea of a recession a short time ago when I was telling you the recession indicators are flashing. Going to have a recession. Said there's no way the market can go down, and we're not going to have a recession. There's no signs of recession. We don't see a swan and all this other stuff. What's going to happen is all the negative sentiment is going to go away, and all the extreme fear that we've been witnessing is going to go away. And people are fickle. They really are fickle. And again, heard the experts that were, I remember watching the financial channels, and one guy was saying, talking about that we were going to move into recession. He had his head screwed on straight, and all the other people on the panel attacked him. Now, these, elites, so-called experts are now all telling us, oh, yeah, Trump and the tariffs, we're going to have a recession. These are the people that scoffed at told us, if you didn't believe that we were going to have a soft landing and the Fed's fairy tale nonsense, then you were a Neanderthal. You were a dope if you didn't believe that. I'm telling you, again, sentiment is going to quickly change as we rally back up, because, again, we're probably completing now the correction and probably now going to head back up, and it's going to be a spectacular rise, and sentiment is going to change. We're going to move back into greed. People calling for this right now, they're going to quickly change their sentiment, and it's the overall topping process. Now, if the stock market is pricing in a recession right now, we're not doing it very well. I say we're in a topping process. We're not doing it well at all. Oh, no. Oh, no. If we're pricing in a recession, the yields would be collapsing right now. Again, we've had this drop. Remember, we talked about coming up here at the resistance zone. Back then, we likely had a peak back there. I told you at the time, I didn't think we were going to go much higher than this level here, and I thought we'd still out the resistance zone. That was correct. Dropping over 19%, 19.28%, and now we've rebounded back up 18.5% in the matter of a couple of days. We had the hollow red candlestick, and I told you the bond market is sending you a message. The S&P and the stock market was likely going to recover from the tariff sell-off. It had a breathtaking rise back up. Now it's getting a topping tail. It's likely going to pull back as the stock market plays catch-up, probably moving back to a negative short-term correlation. We've had a positive correlation, and let me just show you that right here. We've had this positive correlation. We'll probably see it move back into a negative correlation. The topping tail will probably see some kind of pullback here with the 10-year yield. After an 18.5% rise in just a matter of days, the stock market will play catch-up, and again, this will pull back. Now, and again, I talked about the bullish divergence on the MACD and the RSI. Now, if stock market is pricing in a recession, we've got a funny way of doing it because the yields should be collapsing, market collapsing, pricing it in, and the treasuries, which have a negative correlation with the 10-year yield, like TLT, the 20-year Treasury Bond Fund, but treasuries go opposite. They're going down as the 10-year yield has been soaring. Are you picking up what I'm throwing down? So if we're pricing in a recession, are we seeing the 10-year yield begin to soar right now? Shouldn't be happening if we're now pricing in recession. And again, I believe that this is the preview of coming attractions. As I keep saying, it's gone lower than other preview of coming attractions because we've had, I think, more wild swings in this market than any point in history. The S&P just got, the second largest gain in history this week with Trump pausing the reciprocal tariffs for the countries that didn't retaliate and are moving towards the negotiating table. Again, I think the S&P is going to fall. I think we'll see an explosive move higher. Here we jumped above the 200 and the 50. The 50 is a green line. We went back, and again, we moved back and recovered the entire sell-off, Trump's tariff turmoil that was caused in the market. And the yields have recovered all of it very quickly. You're going to see the same thing with Bitcoin. You're going to see the same thing with the S&P 500. I pointed out to you that the 10-year yield, and here again represented by TNX, there's a weekly chart. I told you about this trend line. We're bouncing off of this trend line. We surged 12.75% this week, 12.75% this week, and the stochastic turned back up. So again, a breathtaking rise with yields. Again, the market is likely going to begin to now follow, and I think we've already begun to see that. Not possible. A rally this week in the weekly time frame in the market and surrounding Trump's announcement told there's no possible way that was going to happen. Now, you know that I always talk about Bitcoin having a positive correlation with the S&P 500. Right now, it's getting back above, Bitcoin's getting back above the 20-period moving average. We just got the death cross of the 50 and the 200. Oftentimes on Bitcoin, that marks the bottom. To get the death cross on the S&P 500 and the Nasdaq, sometimes death crosses can mark bottoms just before you get the death cross, or just after you get the death cross, it can mark a bottom. Other times, it can mark the beginning of a bearish phase like we had in 2022, where you get a death cross, you go back up, you overthrow it or test it, and then you get a bigger drop, and it's corrective, larger bull cycle. Other times, you enter a bear market with it like we did in 2007. Coin has this multiple point bullish divergence on the RSI. Again, right now, the RSI is trying to move into the positive region, being up over 5.5%. It's moved up to 51. If it can be successful, this is either going to mark the pull-ups to the 50 level, have marked the counter trend rallies. If it can get above that level, then again, that's going to be positive. It can break above the 50 and the 200 and break this downward trend line with the larger bull flag. The MACD's trying here to turn back up to get a bullish cross. And if it goes positive, again, we could see a massive, massive rally next week or going into the coming weeks ahead here. Now, last week the S&P 500 dropped by over 500 points. It was like 507 or 8 points or whatever it was. It dropped just over 9%. Okay, we went lower. We kept going lower this week to this major support level. This is exactly what Bitcoin did. Bitcoin went and tested the previous high, only it was from 2024. We went further back on the S&P and the Nasdaq, and we were testing these highs, and we're bouncing off of them. Bitcoin's doing the exact same thing, only in the more recent price action with the March of 2024 high. You can see that here quickly on the Bitcoin weekly chart. We're testing this horizontal support, getting a bullish hammer. Exactly what the S&P is doing. It's going back to key support. Here with Bitcoin, it's from March of 2024. With the S&P, it's back to the January 2022 high. Bitcoin's bounced off of this level before. When we've reached peaks right here, it's bounced off of that here. With the last major correction, that was when we got the death cross the last time around in the daily time frame. This is the weekly. And right here, this peak over here, again, that marked the bottom, testing that support, that previous peak. It's doing the exact same thing. I think Bitcoin's going to go to the upper end of the channel and make new highs. I think the S&P is going to do the exact same thing. No, that's not possible. We were told this rally on Bitcoin and on the S&P. That's not possible. By the way, just if you want to say, well, it's not the 2022. If we go back, the Bitcoin peaked before the S&P did in 2021, and we're just above that level. So really, we are testing really this level. We're just above it, right at that March high. So we're bouncing off key support with Bitcoin. So if you want to talk apples and apples, you're still talking apples and apples. Why do you talk about Bitcoin so much? I don't like cryptocurrency. Well, because the market is going to follow Bitcoin. Often than not, the market follows Bitcoin. Sometimes Bitcoin follows the market, but more often than not, Bitcoin is the leader. Nevertheless, I digress. I bet you knew I was going to say that. So we lose 9%. We go down lower. We hit this horizontal level of support, and we bounce, and we get a massive rally back up after dropping. We ended up closing 5.70% higher, 289 points higher. Told this wasn't going to happen. We were told there's no way this is going to happen. All over social media, experts, financial channels, and the media themselves, there was no way the tariff situation was going to be resolved, and all the doom and gloom. Now, again, we're in a topping process. Yes, we are going to have a recession. This is the preview of coming attractions. Media told us there's no way anything's going to get resolved. And I told you, countries are going to come to the negotiating table. Oh, what's happening? Countries are coming to the negotiating table. You had 75 of them. What happened? Announced the reciprocal tariffs on his Liberation Day, lower, and then on the actual launch of the tariffs, he paused them. I talked about this over and over and over again. You could see negotiations happen, deals reached. I told you we could see the tariffs pause, which ended up happening. We saw that previously with the Canada and Mexico tariffs. We saw them paused. I talked about it over and over again. Media told us, no way is that going to happen, and yet it did. See, deals reached quickly. A lot of deals reach quickly. You're going to see tariffs go away. This week now we saw Trump pause it. He increased it on China because they retaliated. He's making an example of them. These countries are seeing that go on. Now they're going to be motivated to make a deal with Trump. And if they don't make a deal with Trump, Trump will say, okay, tariffs go back on. Let's just double them up. I'm going to make a deal in good faith. And again, it's a good way to motivate them. By pausing the tariffs, it's a great strategy. It really is. Pause the tariffs, reward the people that come to the negotiating table, put maximum pressure on those that don't, like China. It's eventually coming to the negotiating table too. They're just going to do it kicking and screaming, making foolish choices. Why not just come to the negotiating table and have the tariffs paused and make a reasonable deal? They'll eventually come to the negotiating table. They have to. And the media is telling us that's not going to happen. And yet we're seeing all these countries come. China will eventually come. Seen this rodeo before. This has already happened in 2018. Same thing happened back then. The media told us, oh, no, tariffs are going to crash everything and there's no way out. And yet the issue got resolved. And slapped on more tariffs with China. Kept it going and the market shrugged it off and ignored it. But the other issues with Canada and Mexico and those issues got resolved. See the same thing here. We rose by 5%, but off of the low, we rose by 11% and 14% from the intra-week high. Again, we've been told this isn't going to happen. The media is telling us that, the market's going to collapse, going into an economic depression. We're going to have a recession. There's been this overreaction, and media is doing their very, very best to scare the pants off everybody. They really are. Yes, we did drop by 21%. We dropped more than what we had when we had the top in 2000 and 2007. But you have to remember that this market, longest bull market in history, has had more exaggerated moves in it. We just had a rally this week, which was the second largest rally on the S&P in history. 9.5% rally in one day. See exaggerated moves. So anyways, we've recovered, 5% for the week, but we rallied up just under 14% to the low to the high for the week. And from the close, from the low, we're up 11% from that low. Is what's going to happen. Again, the bears told us there's no way this is going to happen. The herd is saying it's over. No way we can rally. And again, the herd gets very bearish at bottoms. They get very, very bullish at tops. We likely have a wave 3 and a wave 4. This whole thing after primary wave 4, you have a wave 1, intermediate wave 1, intermediate wave 2. This whole thing is likely intermediate wave 3 and an extended wave 3. You likely have an ABC for 4 that is probably done at a truncated 5th or just the completing of the 5-leg push lower, and I'll show you those charts. You can see it on the intraday. Again, we're likely going to rally back up to new highs. This can drag out now. We got this deeper sell-off. This can drag out into the summer, possibly into the fall, into September, August, September, because of the deep sell-off. Buy us more time. Probably going to see something very, very similar to these previous sell-offs. Over here at the July peak in 2024, we had this sell-off, and then we had this big, big, big recovery. Had it similar over here as we sold off into the 2023 low. We had a big, big, big recovery. You're likely going to get a big, big recovery. It's going to take you to a new high, but then you're going to top. Now, you say, what have you been smoking? Broke 2 important trend lines. Over. You need a 5-leg push down for it to be over. And you don't have that. You have a 3-leg push down. We need this rally to fail and go down and push down another time in order to get a 5-leg push lower. I think the S&P is forming a 3-leg push lower. I think the Russell is forming a 5-leg push lower, and we're going to rally back up and get an ABC on the Russell, while the S&P and the Nasdaq likely go make new highs. So bears need this to happen. This is my bearish count. And again, this is saying that, hey, this wasn't wave 3 right here, like I have marked over here. That wave 3, intermediate wave 3 was over here in 4, and this is intermediate wave 5, and it's done. It's over. The market's toast. And we're now starting the new bear market. Well, if you do that, you need a 5-leg push lower. Okay, get a catapult higher. Bears are going to yell counter trend rally, counter. They're telling us the rally is not, this rally this week wasn't even supposed to happen. All over social media, no possible way. We're about to big collapse. Kramer comes out and says, "Well, Black Monday." Said over the week, before the week started there, and that's where you drop 25% in one day. That's black, and everybody was all worried about it. The buzz all over the media. Social media, I should say, and again, that we're going to have this, and people are really, really afraid at it, and that's what happens at bottoms. It's capitulation, and Kramer's Black Monday 25% crash turned out to be bogus. out, Monday and says, "Oh, everybody needs to calm down." And but you have people that told us this was never going to happen. They come out getting extremely bearish, like Kramer did. People all over social media, and again, after this rally, again, I got. Oh, this is just a bear market rally. That's it. It's done. It's just getting started. Completed the bottom. It's just getting started. We still may get one more leg down, but it's looking like we're not going to. And I think the S&P 500 is just changing the angle of ascent, getting this wave for an ABC move lower. Let's look at the Nasdaq. First of all, with the Nasdaq, I think you've got a really nice linear, with the linear scaling here, I think you've got a really nice looking channel. Secondly, again, look at the peak over here from 2021. We've come down to that level and we're bouncing. Okay. And again, that is the place where this potential trend line could be in play if this low can hold. Here, we have the stochastic recycling back up. This is what we saw with the 10-year yield. The S&P is doing the same thing. We're up 7.43% for the week. The S&P was up over 5% for the week. Nasdaq regained 1,292 points. From the low to the intra-week high, we rallied up 16.41% or so, just eyeballing it there. We rallied up nearly 16.5% to the low to the close of the week. I just mark this on there. We rallied up nearly 13%. Now, again, we were told this wasn't going to happen. We were told there's no way this is going to happen. And again, we've likely tried to bottom out at this key support level, and we're going to begin to claw our way back up, and it's going to be a breathtaking rally back up. But we rallied up off of the low, 12.9%. We rallied up more than that, as I said, at the intra-week high, and we even closed, again, recovering most of those losses that we had, a good chunk of them. Last week, 12%. We recovered 7.5% of that, so more than half. And again, likely on our way back up to test the 50-week moving average. And again, I keep saying it, we're going to get this rally that we're being told is not going to happen. We're already getting it now. We're going to get this rally even higher levels. And the people that are telling us that we're not going to rally, the bears that are telling us there's no way we're going to rally, it's over, going to be screaming at the top of their lungs, counter-trend rally, back test of the trend lines and so forth and all the rest of it. And eventually we'll probably pull back off of those levels and they'll say, see, and then we'll soar right through them and start going to new highs. This is short covering. The people that told us it was never going to happen, now the shorts are having to start to cover. Going to be more short covering because the rally is likely going to continue. Fairly nice looking channel right here. We're at the log scaling. Here's the channel here that recently formed. We ended up breaking that, and we had the trend line prior to that. We had that trend line break, and again, some really nice trend lines on the linear and the log scaling. Here on the log scaling is the bearish count. Again, the bearish count says, oh, wave 5, it's done. You got a 1 or 2. This whole thing right here is 3, and then we get 4, and then we get 5. And it says it's over. Well, if it's over, you need a 5-leg push down. You got a 3-leg push down. So you got problems. Because clearly this is a 3-leg push down at the moment. Now it says it's over. We're toast. It's done. Now here is our log scaling. And our log scaling, we broke the trend line, the red trend line. And again, possibly expanding into a larger channel. Count here says that was not wave 5 that completed there and completing primary wave 5 and intermediate wave 5, that was wave 3, intermediate wave 3, that we completed 1, 2 over here, and this whole thing is an extended wave 3, intermediate wave 3, and we now have intermediate wave 4 in an ABC move, and we're now starting, or if we go a little bit lower, about to start, but I think you got a good shot of a reversal. Now starting a 5-leg push higher for intermediate wave 5 that's going to unfold in 5 minor waves. We'll complete primary wave 5. So this count says we're not done yet. And this is the preview of coming attractions. I think that is probably correct. Those are the bullish and bearish counts in the weekly time frame for the S&P and the Nasdaq. The bears have a problem. And this is the count right here. This is the count that we've had a correction. Okay, and that three-leg push lower. And even if we push lower, it still may be part of this wave C, an extended wave C, and a measured move type of a pattern, like a little lightning bolt. Now, if we did complete intermediate wave 3 over here, and intermediate waves 4 is done or about to complete, again, I think you're going to get this 5-leg push higher. A move above this dotted red line, above 55.04, this low right here, it invalidates the bearish count if this is wave 4. Supposedly for a 5-leg push lower, it would invalidate it, a push above 55.04. So again, can we get above that? And if we do, it's going to invalidate the bearish count. You're getting this wave 4. I think you're going to get wave 1, wave 2. I think you're going to get 3, 4, and on up into 5. And I think you're going to go higher. That's going to be over the next several months here, on into the summer, into the early fall. But I think that's going to happen. And again, you're going to see the sentiment go away. The sentiment's going to be disappearing, and people are going to be going back to, oh, we've avoided the recession. Oh, it didn't happen over here. And okay, see a rally of hope. The negotiations are going to happen. You're going to see deals reached. China's going to come to the negotiating table. You're going to see a lot of this tariff issue resolved by the summer. A lot of it's going to be resolved very quickly. He's telling us, no way, to follow Trump over an economic cliff. This is the preview of coming attractions. So this is the count that we go higher. This is what I think is likely going to be the case. Again, the final phase of the blow off top is usually the most powerful move. So again, just like we had over here with the the sell-off over here and back in 2023, got a powerful move that followed. I think you're going to see something very similar to that. And we had the same thing in 2023, as I talked about on the weekly chart. City's still bearish. We'll see if it can turn back up or not, or if we come back down again, we still might not be finished with this wave C. We'll be watching for clues. I've talked about two possibilities, and again, one is that we have this truncated fifth where, again, you don't go down and take out this low. It's almost two equal lows, kind of a double bottom pattern. Bitcoin did the same thing, actually. Kind of interesting. But it's now moving above the 200 period in the 4-hour time frame. S&P is likely going to follow. So again, if we completed intermediate wave 3 over here, this is a 60-minute chart of the S&P. You got an A, a B, a C. What would invalidate the bearish count getting above this low right here? And if we do that, you can get back above the 200 period and 200 period here on the 60-minute chart, move towards the 200 period on the daily chart. We've got a clear 5-leg push lower here for wave A, an ABC for B, and here it's a little unclear. We have a 1, a 2, a 3, a 4, and then a 5 with a truncated fifth. I think that's probably the case. We have with the C a 1, a 2, a 3, and a 4 in here, and then a 5, and this completed, and we're now beginning completed intermediate wave 4. We're now beginning, and wave C, and we're now beginning this intermediate wave 5 and the early microwaves of that. The truncated fifth is more likely. The other possibility is there's no overlap here between this wave 1 and this one, is that we have a 1, 2, a 3, and this is an A, B, C for 4, and then we get, a 1, 2, 3, 4, 5 down, and then 200-week moving average that I talked about earlier in the week. Still possible, but it could still be a wave C. So those are the possibilities. If we go higher, then it's really going to invalidate the bearish count. You need that 5-leg structure lower. 60-minute chart here, the S&P.